What if I told you that you could invest in hundreds of the world's biggest companies with a single click, pay almost no attention to the stock market, and still potentially outperform many professional investors over the long run? Sounds surprising, right? Yet that's exactly why index funds have become one of the most popular investments in the world. If you've ever felt overwhelmed by investing or wondered how ordinary people build wealth without spending hours researching stocks, this video is for you. Imagine you're trying to predict which team will win a sports league. You could spend countless hours analyzing every team and trying to pick the champion, or you could own a small piece of every team in the league. That way, no matter which team comes out on top, you benefit. An index fund works in a very similar way. Instead of trying to pick the next big winning stock, an index fund allows you to invest in a large group of companies all at once. For example, an index fund that tracks the S&P 500 gives you exposure to 500 of the largest companies in the United States through a single investment. This is one of the biggest reasons investors love index funds: diversification. When you invest in only one company, your success depends heavily on that company's performance. If it struggles, your investment can suffer significantly. But when you own hundreds of companies through an index fund, the impact of any single company's problems becomes much smaller. Some companies may go down, while others. Perhaps the most attractive feature of index funds is their simplicity. Many people think investing requires watching financial news every day, studying stock charts, and making complicated decisions. In reality, many successful long-term investors take a much simpler approach. They invest regularly into broad index funds and allow time and compound growth to work in their favor. Rather than trying to predict which stock will be the next big winner, they focus on consistently adding money to their investments and staying patient. Let's look at a simple example. Imagine investing just $100 every month into an index fund. In the beginning, the growth might seem small, but over time, something powerful starts to happen. The money you earn begins generating its own earnings, and those earnings generate even more earnings. This process is known as compound growth, and it can dramatically increase the value of your investments over the years. The longer you stay invested, the more opportunity your money has to grow. Of course, index funds are not a guaranteed path to profits. The stock market rises and falls, and index funds will experience those ups and downs as well. During market crashes or economic uncertainty, the value of your investment may temporarily decline. However, one of the biggest mistakes investors make is reacting emotionally to short-term market movements. History has shown that markets have experienced many declines, recessions, and crises. Yet broad market indexes have generally continued growing over long periods of time, while past performance never guarantees future results. This long-term perspective is why many investors remain committed to index funds. The truth is that index funds won't make you rich overnight, and they probably won't be the most exciting investment you ever own. But they offer something many investors value even more: a simple, low-cost, diversified way to participate in the growth of the economy without constantly worrying about picking winning stocks. For people who want to build wealth steadily over time, that combination can be incredibly powerful. So if you remember only one thing from this video, remember this: an index fund allows you to own a small piece of hundreds of companies at once, reduce risk through diversification, keep investment costs low, and benefit from long-term market growth. Sometimes the smartest investing strategy isn't finding the perfect stock, it's owning the market itself. If you found this explanation helpful, make sure to like, subscribe, and follow for more simple finance lessons that can help you make smarter money decisions.